is going ahead. We've got Mr. Asif Malbari, the CFO of GCPL, joining us on the show. Mr. Malbari, hi, good morning. And quarter one has been a good quarter for you overall, Mr. Malbari. Let's start by talking about your commodity costs. While costs have started to ease, some categories are still seeing inflation. Can you quantify the price hikes taken across categories, and do you expect to take further price hikes this year, or do you believe the worst of the pricing action is now behind us?
Quarter one has been a very good quarter for us, both in terms of delivering a very, very strong top line as well as delivering a strong double-digit bottom line. It has been broad-based across categories, across geographies. And as you know, it has been a volatile time in terms of Q1, in terms of commodities. Both it's been elevated commodity costs and volatile commodity costs, and has made it difficult to kind of navigate the quarter, both in terms of pricing and in terms of profit. Having said that, and the impact was if we had to kind of specifically talk of the India business, around close to 600 bips, yeah, so around close to 150 crores is the impact in terms of quarter one on costs. We could actually mitigate most of the cost increases through a combination of savings, cost optimizations, pricing, and mix actions. So we were able to deliver the P&L shape which we wanted to. Um, the price increases for the portfolio for quarter one has been broadly around 5%. I do believe, I think the worst is behind us. So I think as we go through, I'm hoping that commodities kind of settle down, and hopefully we wouldn't need to kind of take on significant price increases.
Okay, so that's the outlook on price hikes, not looking at more in the near future, at least not hoping for. And what has the response to these price hikes been on ground? What is the kind of absorption that you are seeing? And has there been any impact on demand at all? Because you have mentioned that this quarter has seen a challenging operating environment for you, at least for the first half.
A reasonably large price increase which we had to take. Having said that, it's something which has impacted the entire industry. It's been different in certain categories, but it's impacted the entire industry in which the entire industry has moved up in terms of pricing table. So to that extent, I would say there has been no relative kind of issue in terms of taking up prices. When I talked about difficult operating conditions, it is because of the volatility and availability. In some places, there was an issue in terms of getting the commodities connected. There was an issue in terms of fill rates, etc. But most of the things have kind of stabilized as we speak.
Okay, and Mr. Malbari, since you are saying that it's looking to be stable now, do you expect gross margins to improve as input costs soften, or is it too early to make that call?
It's still too early to kind of expect gross margin improvements, because all said and done, these reductions in terms of costs happen with a lag. Even as we speak now, there is some bit of a volatility from week to week basis, depending on the global developments. Costs do keep moving up and down. So I think we'll have to wait for a few more months for the situation to stabilize before gross margins improve. But yeah, definitely margins will kind of come back.
Okay, and Mr. Malbari, your India volume growth has come in slightly shy of the street estimate. Are you on track for high single-digit underlying volume growth in India for FY27, since quarter one for you has come in at 7%?
Yeah, we are on track. I think overall we're quite happy with the shape of high single-digit volume growth in India, and we started quarter one with that. At a consolidated level, we are very close to touching double-digit. Overall consolidated volume growth was at 9%. So it's been a solid volume-backed revenue growth. Yeah, and we should be able to deliver the expectations.
Okay, that sounds optimistic. And let's talk about your soaps business that has seen a strong recovery in volumes this quarter. Can you help me with a number on this volume growth, any indication? And do you believe this recovery is sustainable ahead?
Yeah, so we don't go into category-wise volume growth, but yes, soap business is kind of coming back in terms of growth. And yeah, I think sequentially the situation should only improve.
Okay, and you've also entered categories like toilet cleaners and face wash. And this quarter, you forayed into the liquid dishwash category too with Godrej Riz. How have these newer launches performed so far, and by when do you expect them to become meaningful contributors to your top line?
I think currently I would say most of our new launches have become meaningful contributors. We've classified some of these portfolios, which are high growth portfolios. The salience of that has actually moved to around 17% this quarter, so it's reasonably meaningful. It'll only keep going up. We do anticipate the salience will get to 20% by the end of this year. There have been a few more incubations which we've done, which, as you mentioned, toilet cleaner is something which we did a couple of quarters back. It has met all its action standards. Currently, we've expanded it to nationally. It's been received very, very well by consumers. There are multiple other products which are in the pipeline. We have introduced RIS in the market as we speak. This is a dishwash liquid product. Again, holds a huge potential in a fairly fast-growing market. So we are quite confident about the total impact which our growth portfolio will have going forward.
Hey, sounding good. And Mr. Malbari, since your Q1 revenue growth is tracking well ahead of your original estimates, are you comfortably on track for double-digit revenue growth for FY27? And if, I'm trying to gauge a number, could this be in mid-teens?
Yeah, so I think we started the year well. We definitely have had a very, very strong Q1 in terms of revenue growth. So we do believe that we are on track and we should be able to kind of beat some of the estimates for FY27.
Okay, that's interesting. You say that you're looking at exceeding some of those FY27 internal estimates that you've set. So that sounds really optimistic as well. Now, speaking of your international segments, Indonesia, for one, has returned to double-digit growth after a challenging period. Do you believe this turnaround is now complete, or is there still more room for improvement for Indonesia?
No, we had mentioned last year that the business is now stabilizing and will kind of move to growth. So in line with the guidance, the business has kind of delivered a very strong growth. I think there is a benefit in terms of seasonality, etc., which we've got in Q1. But we should be able to kind of sustain a high single-digit volume growth going forward.
Okay, high single-digit volume growth for Indonesia. We're going to be watching out for that. Lastly, Mr. Malbari, when it comes to your segments, home care has consistently outperformed in recent quarters, while personal care is showing signs of recovery. Which category do you believe will be the biggest growth driver for GCPL over the next few quarters?
Yeah, I think it will be both categories, home care and personal care, because both of them have a huge growth potential. We have introduced products in both of these categories. There are innovations which are there, and we continue to support both. So, yeah, I think it's going to be more broad-based growth across our subcategories.
Okay, sounding really good. On that note, Mr. Malbari, thank you so much. Congratulations on a good quarter that you've seen in the first quarter, and hope to interact with you very soon.